Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. Hey, welcome back to part 2 of Common Objections to Life Insurance. Paul and I covered the first half last week. The episode got a little long, so we cut it in half. Unfortunately, there's no small talk this week between Paul and I. Sorry about that. I'm sure you're really going to miss that. But don't worry, I had a good week. Paul had a good week, and we'll be back next week with some more small talk to start the episode. But let's go ahead and pick up where we left off last week. All right. How about these? And I think if people say this stuff, they just don't have enough confidence in themselves, or they're using this as a crutch, but they're like, that all sounds good. I think I need to talk to my attorney and my CPA about all this.
Yeah, I mean, I blindly handed money into my 401k for 15 years without talking to anybody.
Yeah, you didn't know anybody who was managing that money.
Right. I just did it. I had a
Yeah.
warrant officer say, you should be putting as much as you can in there. I was like, okay. And eventually that became, 18 or 19% of my pay.
Yeah.
And now it's all locked up till I'm 59 and a half. So yeah, I've encountered this a few times, and I don't know if I want to poke fun at CPAs right now. Let me just say this. Your CPA is, and I'm going to paint with a broad brush. There's some good ones out there, but they're in charge of filing your taxes and doing tax strategy, and very few of them are helping you generate a wealth strategy. That's somebody else's job. That might be your job because you're an entrepreneur. And your business is your wealth generation machine. So that's fine, but the IRS isn't involved in this process. Like when we practice IBC, there's no 1099. We're not going to do surrenders. I think that, in most cases that's foolish. We're going to use policy loans. So there's not going to be any kind of IRS document that's generated anyway by doing this. So you can talk to them all you want, but they're going to tell you what I just said.
Yeah. And typically CPAs are reactive, not proactive.
Mm-hmm.
They're going to figure out, looking backwards, how you can save the most taxes possible from what you've already done. And attorneys, attorneys never want to be blamed for anything. So I think attorney recommending, yes, you should do this. They only stand to lose. If they say, no, you shouldn't, then how can they be blamed for anything?
Yeah, it would be interesting. I've got an attorney friend that's an estate. She works in estate planning. I need to go pick her brain. Maybe, she could be probably a good guest for the podcast and say, like, what kind of advice are we giving families? Let's say they're in their 50s and you're advising them. Are we advising them to have permanent life insurance? And when I say permanent, I mean whole life.
Mm-hmm.
I'm not talking universal. I don't consider that. I know what they say, but it's not.
That would be good. Why don't you do that? That'd be good to have an estate planning professional on the show.
Yeah, she's super smart, very bright. Whenever I have an estate planning question, of course, she's a Massachusetts practicing attorney. Used to be at Texas as well, but they retired up there. But anyway, just to see, like, are we advising our clients that we're giving legal advice and estate planning advice? Are we saying, hey, you've got, this death tax in Massachusetts that the threshold starts at $1 million or whatever it is? I'm making that up, but I think that might be right. And I know there's a difference between what they call like death tax, inheritance tax, estate, there's whatever they're calling it up there.
It's probably a low threshold out there though for the state.
But I think the last time I spoke with her, it was $1 million, and I was like,
wow.
Geez. Like that's a lot of houses in Massachusetts, $1 million. So anyway, but are they advising their clients like, hey, you need permanent life insurance to cover this bill because the state of Massachusetts is going to walk in and take whatever, 20%, 30%, whatever it is.
Yeah. And they're first in line.
A certain threshold, the Fed's going to come in and take a bunch as well. So
yeah. Right.
What a racket. Anyway.
Yeah. So, and that's where life insurance can certainly play a huge part in that, because what do the feds want, or what does the state want? They don't want uh they don't want the cars that you own
No.
or the golf clubs. They want cash.
cash.
And that's all
They
they're
want
going
cash.
to accept is cash. Where do you get cash? Well, you got to fire sale your assets and
Yeah,
not
no
get a
question.
very great deal, or you have life insurance that provides cash where none existed before, that you got for pennies on the dollar. There you go.
Really is pennies on the dollar.
Yeah. Yep.
Mm-hmm. Give me
All right,
pennies,
how about-
I'll give you dollars.
Yeah. That's a good trade. How about this? I need to wait. I think I need to wait until next year. I got some things going on here, Paul. Come back to this next year. Let's do it then.
So I got a simple answer for that. Let's do convertible term.
There you go. Boom.
There's no reason to wait to get underwritten for life insurance. I'm not saying it's got to be dividend paying whole life, but it better be convertible term.
Yeah.
Right? Like I think and I've said this a million times, it's a no-brainer.
Yeah.
Again,
I'm
to
not
your
going to
point,
let you
like,
off the
wait for-
hook. Yeah. We're saying, yeah,
I know
okay,
you
come back
need
next
this.
year.
Yeah.
Yeah.
I know you need this, right? Like you may not realize it, but I know. I'm in this industry.
Yeah.
People die.
And what are you waiting for? Or next year, are you going to be younger? Are you waiting to be younger? Or are you going to be healthier? Maybe you'll be healthier, but guess what? If you're healthier, we just go back through underwriting and upgrade your rating. Anyway.
Oh yeah, did you know you could do that, fellas?
Yeah, you can do that. Maybe you're a little too fat right now. And you're like, well, I'm going to wait until I lose some weight in the next 6 months. Why? Convertible term right now, or whole life. 6 months, a year from now, maybe you've lost that weight. We go back through underwriting, you get an improved rating, and you get cheaper insurance. But
Right. It'll never be
yeah.
cheaper than right now.
No, unless you improve your health and you get a better rating.
Right.
Right.
Generally speaking, if you're like most people we underwrite are standard, right? You're not, it's just the way it is. But you will get older. And
Yeah.
getting older increases the cost of death benefit.
Yeah. And realize that with convertible term, you're locking in your health rating today, but you're not locking in your age. So when you convert that to whole life, it's going to convert at whatever age you're at that time. So
Yep.
the sooner the better.
Yep. And you don't have to convert it all at once. You can convert it in chunks.
Correct. So yeah, you don't have to think all or nothing. Don't throw the baby out with the bathwater.
When in Rome.
When in Rome. What was the other one you just said at the beginning? I was trying not to laugh. Suck the egg. What the heck does that mean?
Did I say that?
Yeah, you said suck the egg. I don't even know what that means.
Different ways to suck the egg? You
I
never
don't think
heard that?
I don't think I want to know what that means. We can talk about it offline.
Hey, comment on YouTube if you've never heard. There's
I've
different ways to
never heard
suck
that
this
one.
egg. Like,
I've heard crack the nut, skin the cat.
yeah,
all
those are all like synonym phrases.
Never heard suck the egg. That must be a Boston, Massachusetts thing. I don't know.
Yeah, it might be.
You guys say some weird stuff out there.
Yeah,
They say
But
some
we
weird stuff
invented-
here in
we-
Minnesota too.
we invented this country, so we get to do whatever we want.
Yeah. Yep. Little tea party action.
Yeah.
All right. Well, how about this one? Actually, this is an immediate turnoff to me. If somebody says something like this, I'm pretty much done with you at that point. But, well, what do I need all that life insurance for? I don't want to spoil my kids with all that money. I'm not going to leave my kids a bunch of money.
So, yeah, I always go back to the people I'm working with, and let's face it, the people we work with as clients, these are phenomenal people,
Mm-hmm.
right? They're good people. Otherwise, we wouldn't work with them, right? So, hopefully, y'all realize that. Like, it's you might think you're definitely interviewing us, but we're also interviewing you at the same time. I think I'd like to think that the apple doesn't fall far from the tree. There's another one for you.
Yeah. I know what that one means.
Okay, he knows what that one means. Perfect. So that's not always the case. I heard our other friend the other day say, kind of parenting is kind of a crapshoot, right? You never know what you're going to get. It's kind of like a box of chocolates. There's another
Right.
one.
Exactly.
But generally speaking, I think that's true. And I think these people of character are likely going to raise other people of character more often than not.
Yeah.
And, we've often said, part of what we're doing with our own families, we're educating. They're going to read these books. They're gonna know how we conduct the Beffert family business or the Fougere family business. This is how we do things.
Right.
So it's ingrained in them. It's just normal to them. It would be weird to them when they're listening to their friends talk about their car loan or whatever. It's gonna be different.
Yeah. And and I think what you're getting at is that money doesn't spoil kids.
No.
Poor character does.
Yeah, that's
so
right.
Money just amplifies whatever you are. And I used to hear that all the time. And I'm, the older I get and the more money, more capital I accumulate, I think that's more and more true. Money just amplifies who you already are.
Yeah. Yeah. If you're, you see what lottery winners all the time. Well, they were spending money like drunken sailors prior to winning their, $50 million. And they were spending money like drunken sailors after they got the $25 million after taxes. And then a few years later, they're broke. So the habits don't change. The character didn't change. So I think I agree with that 100%.
Yeah. So that is not a valid reason not to leave an inheritance.
Yeah. You're going to leave them something anyway. You're going to leave them a house to sell, perhaps, maybe vehicles to liquidate, stuff.
Yeah.
Like, Ma, why are you keeping all this stuff in the attic? Like, right?
Yeah.
You're leaving them something. So, just keep that in mind.
Yeah,
And
absolutely.
They're probably already spoiled if you're worried about that. Maybe they're already spoiled.
Maybe so. And hey, here's a newsflash. You don't have to make your kids the beneficiaries.
That's right.
I mean, you could make it anything you want, any organization, charity. Why did I just get a thumbs down emoji on my screen?
Oh, because it just does that.
Yeah, but I didn't make any hand movements. I'm not moving my hands.
I don't know. There's like a timer.
Maybe because I said you
There
don't have to do this. But
I don't know.
Yeah, you could make it the trust a beneficiary, and then in the trust say what you and I talked about this a couple episodes ago. Like, hey, maybe the trust just says, hey, we'll match your income every year, or we'll pay your taxes every year,
right?
Or we'll give you 25 grand a year. That's it. Like you get here's 25 grand a year to take the pressure off a little bit. That's not going to spoil anybody.
Here's 25,000 a year, and it has to be paid in dividend-paying whole life premium.
There you go. And you got to use it for premium. And then you can...
It's very restrictive.
Yeah. Yeah. Or you could just have it there as loans that kids could take for education, house, business, something like that.
Anyway, to the point, there's ways around that. And obviously, you're gonna play that hand when it comes to you, right? So at that point, you're gonna know, or you already do know what you're dealing with in your offspring, right?
Yeah.
Like our kids are still young, so we don't quite know yet, but within 10 years, we'll know.
You'll have a good idea. Yeah.
We'll have a damn good idea. So
I think it's just a lazy attitude to think that I don't want to leave my kids something, because then I actually have to train them and educate them to be responsible with what I leave them.
Right.
Yeah.
Definitely, it takes great care and it takes time. But gosh, what a wonderful thing at the same time, though. That's part of taking care of the next generation after that. And I've often said, because this hits close to home, is you have no idea. I think if we have children, we want grandchildren as well. Our grandchildren, what are they going to be like? Are they going to have health problems?
Mm-hmm.
Whatever. Are they going to have
the
to buy a
unknown
home because of inflation? I mean, there's all kinds of considerations, right?
Yeah.
So just, I don't know. But you can't make people think like that, Dave.
Maybe it's more a reflection of the person, because maybe they think back to where if I would have inherited $1 million when I was 25, I would have been an idiot and I would have been spoiled. Well, then I would say, well, what could your parents have done to set you up for success to handle that $1 million, or to not give you all that million at once, to not spoil you? Is there something that could have been done?
The way I'm going to handle this, Dave, and maybe this is helpful for people, is And it's just kind of like Nelson did with his wife Mary, right? He trained her to be a widow so that when the time came, she would know what to do. And
Yeah.
he trained his son-in-law and everybody else in the family, right? That's what I'm going to do with Tammy. Obviously, she's already pretty well trained, but with the children as well. Is, hey, when this happens, here is the plan. Here's the O plan, right? This is what's going to occur, just so they know. And maybe you rehearse it. I don't know. Maybe that sounds weird, but because I'm an Army guy, but rehearsal, man,
Yeah.
there's some utility to it. It does work.
Yeah. So again, another plug for a good reason to have an estate planning professional on the show to give us some tips, give everybody some ideas on what can you do today, even before creating a full estate plan. What are some practical steps you can take today to ensure if you die tomorrow, your family's not going to be looking around saying, where's the answer to everything? Where's all the bank accounts?
What are the passwords? Because you can't remember them ever.
Right. So, okay. And how about here's one that a lot of people fall prey to, mostly in that Dave Ramsey camp, that, oh, I only need life insurance until I retire, and then I'll have enough assets that I'll be self-insured. So, I've got enough. I'm self-insured. I don't need any more. So, what does that say to you?
I think they've fallen victim to just bad information. It's the same. It's a this or that choice. I can't have this and invest, right? Which is not true, right? We've been over it a million times. It's actually terrible information. And this hit a friend as he retired out of the Army, right? And we've talked about that on the podcast. It was just awful. Followed, all the way through baby. I don't know how many baby steps are there? I have no idea. 8, 7 steps.
Yeah.
Why not?
What if there were 6? What if somebody came around and said, there's only 6 baby steps?
That's right. 6-minute abs.
Nobody can do abs in 6 minutes. 7 minutes, man.
So I think, do some self-exploration. This is worth whole life insurance. And there's a lot of garbage information out there on it. You can't go out there and search on Google, because you're just going to get an article that was paid for by somebody and written by somebody who's mildly intelligent on the subject.
Or AI.
Or AI. That's just it. There's not really any good information unless you're going. I would go to the source. I'd go to the Nelson Nash Institute. There's a few others, but you're not going to get good information. You'll get some just basic, average Joe. This is what whole life insurance is. This is what term life insurance is. But you're not really. That's not even scratching the surface. That's just product talk. That's not why and legacy and controlling the banking function. You're not going to find that anywhere outside the infinite banking world. So really by self-insuring, you're just saying, I don't need insurance, and you're going without insurance.
Yeah.
And there's too many unknowns. I'm sorry. Your portfolio isn't going to, I'm speaking again I'm speaking about most people here.
Right.
Your portfolio is not going to be enough to cover those self-insured what ifs. They're just not.
Right. Well, especially depending on the lifestyle that you want to live and leave behind. But I think that statement, that objection is coming from a place of ignorance as well, where, you just alluded to it, people who don't know enough. You don't know enough to say a statement like that. What about, all the assets that you have? Are they creating an income? Does your family, like this is the case with a lot of real estate investors, I would say, where they're like, well, I've got plenty of real estate assets that are going to provide all the passive income my family needs. Really? How passive is that if you're gone? Do they know how to handle that business and run that business? Are they going to want to? Do they want all those houses? Or are they most likely just going to turn around and just sell those things for the cash? Because what do they really want? They want the cash.
Right.
So,
and
have you taught your family how to run that business and do all that?
Maybe, but
maybe
probably not. We saw that a lot with and we could probably talk to our friends in the business, that are buying these apartment complexes. But a lot of these complexes are being if they weren't part of that like 2020, 2021 churn when rates were super low and everyone was like, I'm a real estate investor.
Or a real estate agent. Yeah.
Yeah. Or an agent, right?
Yeah.
A lot of the people they were buying from were people in their 70s and 80s getting rid of those assets for the cash.
Yeah.
Because they want it out.
Yeah.
So those are, certainly the easiest way to pass on generational wealth with certainty and simplicity, more importantly, is
Very simple.
dividend paying whole life insurance. There
Right.
is no better way to pass wealth.
And again, let's talk to the real estate investor who's got all those real estate assets. Well, if your estate is worth over a certain amount and estate taxes for your state or the feds kicks in, they don't want those houses. They want cash. Where's your family going to get the cash? They got to sell those houses.
All that deferred basis from
Right.
1031 or 1031 exchanges.
Well, they may get a step up in basis, but yeah, maybe they've been doing 1031 exchanges. Yeah. Right. For years and years and years, just kicking that can down the road.
Right.
But I would ask, is it your goal to pass on less wealth to your family than you are capable of, or less wealth than they deserve? Is that your goal? Because if it is, by all means, do not get permanent life insurance.
Yeah, you'll succeed.
You'll succeed.
You'll
Yeah.
You'll succeed 100%.
Yeah. So, but if your goal is to, no kidding, pass on as much wealth as you possibly can and transfer it as tax-free as possible, then, man, load up. Because like we said before, one way or another, you're going to get everything you ever paid in back out. Whether you take it out as cash value down the road before you die, or your family gets it after you die, you're going to get everything back that you put in and more.
Yep. You can, done properly, you're practicing IBC properly over a long period of time. When I say long period of time, Dave, let me qualify that. Let's say 20 years, which isn't that long of a period of time, but let's say 20 years. Yes, you will certainly be able to get many times over what you've paid in premium back out without tax.
Yep.
All of the premium, and then many times more than that as just passive income from the policy.
Tax-free compounding.
Tax-free.
I like
it.
it.
Goodness gracious.
Yeah.
So, but yeah, I think you nailed it. It's just ignorance, and we were all ignorant at one point with regard to, forget IBC. None of us knew about IBC, but the product of whole life insurance has been twisted and distorted, and there's just terrible information out there from people who, I guess they don't know better, but they should know better. I don't really care either way. It's bad.
Yeah.
But most people listen to it, and that's kind of the sad thing. So
Yeah. Yep. Well, and that's what we're here for, to try to spread a different message, an accurate message, and to educate people. So if you guys have any more questions, send them in. If you have any more objections to permanent whole life insurance, send those in as well. And we'll handle those on another episode.
yeah, maybe Blaze or whatever his name was, Johnny Blaze.
Johnny Blaze.
Johnny Blaze.
Yeah. He sounds like an F-16 pilot. Those guys always had the most ridiculous call signs. It was like laser, blazer, phaser. And then like 10 of them named Tex because they're from Texas. So anyway, I like to give those guys a hard time.
Good.
Yeah. So, all right. Well, cool. Hey, everybody. I hope you enjoyed, and I hope you learned something along the way, and your idea of whole life insurance and what you're doing if you're already doing IBC has elevated, and you have a better sense of why you're doing it. You never want to lose that education on why you're doing it, and who you're doing it for. You're doing it for you and your family while you're alive, and you're doing it for your family and your legacy when you graduate. So keep on that road. And if you haven't started, look us up, check us out in the show notes. You can contact me or Paul, and we'd love to to spend some time talking with you. So, all right. With that, we'll leave you to it. Have a good week. Talk to you next week. Until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle in a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.